Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
There and welcome to the ISE FX Options Weekly Outlook for September 14th to the 20th. I'm your host, Jason Ayres, founder and president of OptionSource.net. We're going to start, as always, with a look at our weekly U.S. dollar index. This is a great way to gain a little insight as to how the U.S. dollar has been trading against a basket of currencies. We were addressing the break above that 77-78 focal area last week and suggested that if it were to continue forward, we would likely see some resistance and a possible rejection off of the 80 to 82 focal area, which is indeed what happened. Now, we were mentioning that that also represented a 50% retracement on the bigger picture. So at this point, we're looking for a possible continuation down back into retest that 77 to 78 focal area. In saying that, if that area doesn't hold, our next logical target to the downside is the 74 to 75 range where it broke out of several weeks ago. Now, keeping that in mind, we can look at our MACD here and see that we're still trending very strongly to the upside, and our RSI is still showing some momentum. However, it is starting to taper off a little bit. Now, the one thing that we do have to keep in mind is that we have an FOMC meeting this Tuesday, which is the 16th at 2:15, where the Feds are going to speak on their current monetary policy, which is definitely going to have an influence on how the U.S. dollar trades. So be very cautious and watch your positions very closely throughout the next couple of days. If things should come out positive for the U.S. dollar, we're still looking at that 80 to 82 focal area as being very, very significant with respect to a near-term resistance area. With that in mind, let's take a look at our ISE FX options currency pair values, the first of which will be the CDD, the US versus the Canadian dollar. We saw prices play up into that 107 to 108 focal area where we suggested we would likely meet with some significant resistance and a possible rejection. As you can see here on Friday, prices pulled off of that. We have identified a pivot point in around the 105.5 level there. Should prices break through that, we're looking at targeting and settling at a possible support in at the 104.5 to 105 area again. If that significant support level doesn't hold, the window is open for a continuation to the downside as your MACD and your RSI suggest that the current uptrend is under a little bit of pressure. Should that happen, we would look at prices possibly settling down in at the 102 to the 103 focal zone, which is our next logical area of support. We have to keep in mind that we do have the FOMC meeting on Tuesday the 16th at 2:15, in which case anything can happen. The possibility of a consolidation at the 104.5 to the 105 cannot be overlooked. 107 to 108 still remains a very significant resistance level. However, if prices should break through that, we're still targeting the 110 to the 111 as the next possible area of resistance. Okay, let's take a quick look at the YUK, the US versus the Japanese yen. We were watching prices bounce off of the 105.5 and 106 focal zone and suggested that the 108 to the 108.5 would likely be a area of probable resistance and to look for rejection. We actually did see that as prices once again found themselves playing back down into that 105, 106 focal zone. Now, we've seen a bounce off of that currently where we are now back into that 108 to 108.5 focal zone. We have to recognize the possibility of another rejection there. As we move down to our MACD, we can see that although we still are, according to the MACD, in a continued downtrend, prices are starting to favor the upside a little bit as our blue line begins to move closer to our red line. Our RSI, which has been in the oversold territory for the last week or so, is now starting to creep up as well, suggesting the possibility of a building of momentum to the upside. Now, in saying that, if there's a break above that 108 to the 108.5 focal zone, we're targeting in at the 110 to 110.5 as the next logical area of resistance. Should we actually play back down to that 105.5 to 106 focal zone and break through, that leaves a window open for a continuation to the downside where the 103.5 to the 104 would be our next logical focal zone. All right, let's take a look at the EUI, the US versus the Euro. Last week we left prices hanging in the 70 focal zone that we identified, suggesting that in the bigger picture this area actually represented a possible resistance level. Now prices actually played right up through that, and we did suggest that if they were to continue moving to the upside, a rejection in at the 71 to 72 focal zone was a high probability. As you can see here, Thursday and Friday we played off of that zone that we identified, where we now find ourselves heading back into that 70 focal zone that we've been speaking about. That area now, although was an area of resistance previously, now becomes an area of support, and we have to recognize that the possibility for a consolidation there is a potential can potentially take place. Should that area not hold, we're likely to see a play back down into that 68 to 69 focal zone, which represents the next logical area of support. If we move down into our MACD, we can see that prices are actually starting to again play down to the lower end of the range, and we're definitely losing some momentum according to our RSI in that upside trend. So we do again have to keep in mind that we have an FOMC meeting coming up on Tuesday, which opens up the possibility for anything to happen, but let's keep in mind these targets as we move forward into our week. All right, let's take a quick look at the BPX, the US versus the British pound. We saw prices break out of that 54 to 54.5 focal zone, where last week we found ourselves playing in and around that 56 to 57 area that we identified. Now this area was identified as a significant level of resistance, and we anticipated a possible price rejection off of that level, which we've seen happen. With this in mind, the window for a further continuation of the downside back into that 54 to 54.5 focal zone is a possibility to be considered. That area also represents a 38% retracement in the bigger picture move to the upside. Our MACD is also starting to cross over, suggesting that that preceding uptrend is now in jeopardy, and that the possibility of a downtrend, at least for the short term, should be considered. Our RSI, which had been trending with a momentum to the upside quite nicely, has also turned down, suggesting that we should consider the possibility of a continued move to the downside, particularly into that 54 to 54.5 focal zone. And finally, let's take a look at the AUX, the US versus the Australian dollar. We were watching prices play into that 124 focal zone last week and suggested that this represented an area of possible resistance. We did, however, acknowledge that a continuation through this price range would likely target into the 127 focal zone that you can see here we've identified. Now, what's interesting is that we actually played into that 127 zone for one day, but prices turned around and closed back into that 124 area. With that in mind, we have to consider the possibility now of a continuation to the downside into that 116 focal zone where prices broke out of on our second leg of our uptrend. Now, what's interesting to note as well is that this area also represents a 38% retracement on the bigger picture price move, and if we actually have a look at our MACD, we can see that it appears our current uptrend is starting to lose steam time. Our MACD hasn't crossed yet, but is quite close. Our RSI is also suggesting that that current or that preceding momentum to the upside is now starting to turn around. So we have to consider the possibility of that move back down into that 116 focal zone. Folks, that has been your ISE FX Options Weekly Outlook, looking forward to the 14th to the 20th. I'm your host, Jason Ayres, founder and president of OptionSource.net. Just one quick reminder, that's the FOMC speaks Tuesday the 16th at 2:15. Remember that this can have a significant impact on your positions within the ISE FX options market, so we need to keep that in mind as we make any further trading decisions. Thanks very much for joining me this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.